What up, people? It's your boy, your mentor, OKT Genesis. We are here on another session of mentorship by me. Uh, we're gonna base this one off a element of a trade setup, right? Now we're going into something that is gonna blow your mind, and you're gonna see them on charts because I'm gonna do this, and I'm gonna go on the charts with you on the live right now, and I'll show you some of these stuff I'm about to show y'all today. So I have 4 things I want to tell you about the element of the trade setup, right? There are 4 things that the market always does. 4 things that the market will always do. Either the market is expanding, which is called expansion, or you want to see the market doing a retracement, or you see the market reverse and consolidate. Those are the 4 things you're gonna see the market doing most of the times, right? So when we mean expansion, what do we mean in expansion? Expansion is when you see the market move all of a sudden out of a position that is expansion is when you see the market do a quick movement from a position to another position. That is, we're gonna go to the chart right now. This is what I call expansion. When you see the market moving from here, boom, excuse me, yeah, this is what I call, you see the market move from here, boom, to this level, right? So this movement from here to here is what I call expansion. So hope is made clear for everybody over here. Now, retracement. What is retracement? Unlike expansion, retracement is when you see the market does this expansion. After you see the market expand, probably it drops. I'm going to take another trend line. Probably you see the market drop up to this level where you see the expansion took place, and now before continuing up, before you see the market continue up like this, boom, right? Now that is this movement. Now this movement from here, this movement from here to here is what they call retracement. So retracement is when you see the market coming back from where it expand, probably to take another force to go above the expansion level with which it reached the last time, right? So that's what they call expansion. That's what they call retracement pattern. Now you want to see reversal, right? What is a reversal? Let's say we've been in a bullish trend. Let's say we've been bullish all the way. We've been bullish, and you see market reversal is when you see the market move all of a sudden from a position where it was to the opposite direction. That is what is called market reversal, right? For example, let's say the market was at this position. Now you see the market just drop, boom, to this level, right? That's what they call market reversal. You see the market reversed. And consolidation is when you see the market accumulate at a particular range. As you see what is going on here right now, this is what they call consolidation, this box. And what the market does most of the time during consolidation is it builds contract, right? It put both buyers and seller into this box in order to confuse you, so you won't know the direction in which they're gonna go after this, right? So that is what is called consolidation. And if you know what you're doing, if you know what you're looking for, if you have your directional bias, you won't be a victim of this, right? You'll probably wait for the market to expand, as I said, the four things that are here. If you see a consolidation, you can still trade a consolidation if you know what it is. If you know where the high and the lows are, you can trade a consolidation. But I don't want you to focus on that right now. When you see a consolidation, either you wait for an expansion, that is, you wait for a movement off of that box of consolidation, and if you see the market retrace, like that is coming back to that box to test a level. If you missed a movement of the expansion, it's okay. You're not gonna get every movement. It's okay. You sit and wait for the retracement. If you see a retracement up to the box, which is probably gonna be at the level of an order block. I'm gonna tell you what another block is because most of you don't know yet. Then you will see a continuation from there, right? So most of the time when you see consolidation, be patient and wait for an expansion, either bullishly or bearishly, depending on the direction of bias at which you're working on, right? And now when you see the expansion, boom, you see a retracement, and after you see a retracement, you see a continuation or a total reversal. Now you see I've already spoken about the four elements. Still on just this consolidation area I was talking about, right? And most of the times the market always does this. Now, if we're talking about consolidation, let me show you what a consolidation looks like. I'll show you what a consolidation looks like over here. Wow, this is a good one. This is what they call a consolidation, right? This is what they call a consolidation, right? Now, if you see the market consolidating like this, doing a consolidating, and what you want to see is with your directional bias at hand, you see the market expand, and it does what? It retrace. Now, this movement downward, you see the market go up and retrace, right? Now, this movement downward is what they call the retracement. And when it retraces, it bounces off what? An order block. This last candle here before this bullish movement. So it bounces at this level. You see, it bounces at this level, which is giving you another entry. If you miss this little movement upward, it's giving you a second entry at this level for you to take this bullish position because it's going to continue up, right? Now, this is what they call a consolidation, a bullish consolidation. I'm going to show you a bearish consolidation right now. Still on this same um, currency pair. This is a bearish consolidation, right? You see the market consolidate, and you see it drops all of a sudden. What do we say? Retracement. You see the market retrace a little bit, but taking out the stops of all these other people because liquidity is over here. Now, once it hit the stop, you see the market reverse. It gives you a second entry here by filling what they call the fair value gap. This is a fair value gap, right? A fair value gap is a sudden movement by just a candle or two, but in the downside or by the upside without it being filled or without it being attached with either a bearish or a bullish candle. Now, what is a fair value gap? This is what they call a fair value gap. So every time you see a fair value gap, 9 times out of 10, you see the market coming back, like you see coming back over here to fill this fair value gap. There are people that trade only fair value gaps. There are people that trade only off the other blocks. There are people that trade only off consolidation, and there are people that trade only off market reversal. You cannot match that all at once, but you can take one of those and you still make good money out of it, right? So I tell you, do this and you see a change in your market strategies, and you see a good change in the way you start seeing the market. I just gave you some two specific entry on USD card on how market reversal works, right? It's mind blowing. I know maybe it's mind blowing for you people. Like I said, liquidity pool. I've already explained almost all of these things on here because of reference point. If you see a market expand, you're looking for an order block. If you see a market trying to reverse, it's either going to fill a fair value gap before doing the reverse. As I said, you see the market coming back up here to fill this fair value gap before doing what? The reversal. You see, doing the reversal. You know what I'm saying? You understand? You get what I'm saying? You get the point now, right? So that is how the market works. Go through your chat, you're gonna see each of these things I'm trying to tell y'all. I'm serious and I'm damn serious about these. This is the same thing here, brothers and sisters, ladies and gentlemen. Watch keenly. This is another fair value gap here which got filled, and you see the market drop all of a sudden after it filled the fair value gap. You can make good money trading just off fair value gap. Ladies and gentlemen, beautiful people, watch this. After filling the fair value gap, it dropped 312 pips. It's not small money. You can make mad money out of that with a standard or mini lot size. So I'm showing you how this works. You see market reversal. Now that is how effective you see market reversal. When you want, if you see a market reversal, what do you look for? It's either looking for a fair value gap or the block or liquidity pool, which is the run of stop runs, which I showed you here on this section, which I showed you here. This is a run of stop loss because it took out the stops of those who were at this area, right? It took out the stop loss of those who were at this area. Now you drop. That is the run of stop run before you see a market doing the reversal or equilibrium. And this is where we talk about the equilibrium. Ladies and gentlemen, open your eyes. The market does this every single time, and you're gonna see it repeating in front of your eyes. Only if a good mentor open your third eyes that you're gonna understand this. I bet you. There's nothing as accurate as this so long as you already know what you're looking for. You see, market reversal, consolidation is the equilibrium. The middle of this box is what they call the equilibrium. If you take your Fibonacci, that's the only tool I'm using to trade. If you take your Fibonacci, what a Fibonacci at? So if you take your Fibonacci, you measure a year from the candlestick, not the weeks. You measure a year to here. You see, you get your equilibrium where this black line is sad, and it gives you a perfect entry. I'm gonna mark that equilibrium with this, and I will remove the Fibonacci. I remove the C. I've marked the equilibrium of these blocks, and it gives you a perfect sniper's entry off of that. You see how accurate this can be. It gives you a perfect sniper entry at this area. My brothers and sisters, this is not something you need to share. It's priceless. Not because you're giving me some couple of hundred makes you gonna give this away. Keep this preciously. Look at what it does. Accuracy on USD card. Accuracy, brothers. Accuracy. Now that's how I do to take my snipers entry. Most of you will be asking me how I do that. That's how I do. You see, those are the four things you're always gonna see the market do. I bet you. If you want to trade, you focus only on that four. I tell you, you still make money out of this market. You still make money, and I really mean it. You will still make money out of this market if you decide to trade only off of those. Okay, so those are the four things you want to see the market doing. If you focus on just these four things that I explained above, if you have a question, like I always say, send me through my email, DM me on Telegram, tell me what's up. I'll explain it more better to you, right? You paid for this and you get what you pay for. One has one, like my guy always tells me this, one hand washes another, right? So if you focus only on this 4 point and you look at the reference point, that is, you focus on, you want to see the market expand. After the market expand, if it's expanding, you want to see it bounce off the reference point, which is giving you an entry either in being bullish or bearish into the market regarding your directional bias, right? It's gonna give you a reference point either through bouncing through another block, fair value gap, liquidity pool, which is a stop run, which I showed you equally, bounce off the equilibrium. Those are the four things you need to focus on, and it's gonna give you a good sniper entry. Now, with that being said, I thank you, ladies and gentlemen, for your kind time for listening to me. And the next video is gonna be fire just like this. See you at the top because the bottom is too crowded.